Yes, you can remortgage your council house even after you've bought it, once your fixed rate is done, but you need to consider a lot of things. And yes, you can pay off your mortgage early, but you need to consider, are you going to be staying there for long, or are you going to be there for short? Hi guys, welcome back to my channel. Welcome back to another episode with Boss Beauty. My name is Olatejubiele if you're new, and if you've been coming on along, thank you so much for coming. Thank you so much for staying. I appreciate all of you guys. On today's episode, I'm going to be sharing another interesting topic about mortgage. So this question now is, should I pay off my mortgage early? Yes, it's good to pay off your mortgage early because it gives you peace of mind. You're mortgage free, you're rent free. But guys, there's a lot to consider when you're doing that. So, based on my personal experience, I got a mortgage. It was for 5 years. Interest rate of 2.45 or 2.54, something like that. This was in 2019, so I had 5 years. And don't forget, this topic started with, should I buy my council house? So it was my council house that I bought, and at the time I bought it, it was very affordable. It was for 5 years, and in my head I'm thinking, oh, 5 years. In fact, the amount that the council quoted me to pay, if I had my way, I wanted to pay it one off, but I didn't have the money, so I got a mortgage. So now I got the mortgage, and I had 80 years for that mortgage to be complete at interest rate of 2.45, as I said earlier. And I was paying, or I was supposed to pay, it was about $291 per month, because don't forget, it was a council house that I bought. And that's one of the advantages of buying a council house. It's cheaper. It's cheaper than if you were buying it off market. Therefore, whatever you're paying back would be either close to what you've been paying as your normal rent, or might even be lesser than what you pay for your rent. So anyway, because as at that 2019, a lot of all these YouTube videos, all these online ads is pay off your mortgage, pay off your mortgage. And then I had a meeting with a financial advisor as well, and the advice was to pay off your mortgage early. But there's a lot to consider if you should pay off your mortgage early. And I would say it was a great mistake for me. Now, the mistake that it was, or one of the things you need to consider if you're thinking, should I pay off my mortgage early, is, are you going to be living in that property long term? That is, till retirement, till you grow old, till your children actually live and go their own way, and it's just you or you and your partner living in that property. If your answer is yes, then yes, you can pay off your mortgage early. But if you are thinking, no, this one I'm living in now is just a temporary one, I'm going to be buying another one soon, which in my situation was, I was just waiting for that initial 5 years of having to pay discount back if I sell the property. So I thought, right, I'm going to pay, I'm going to be there for at least 5 years. I have no choice. And then I will buy a bigger property for myself and my family. Now, in my head and with the financial advisor, I already thought that 8 years, I want to pay off my mortgage within the 5 years, because my interest rate was very nice. It was only 2.45. And I was only paying $291. So I thought, yeah, I can still afford more. And yes, I can pay off my mortgage, so that by the time I finish paying off my mortgage and I want to buy another one, I can just use all of that money towards the next one. That was the plan, or that was the idea. But I was wrong. Yes. And the reason why I was wrong is, again, like I said, if you're going to be paying off your mortgage early, it will be because you've planned that where you are is your retirement home. That's where you're going to stay. That's where you're going to be living until you retire. But if it's in my situation where the plan was to move out or buy another one in 5 years, then it's not worth it. Now I started to pay off my rent, my mortgage. So what I did was, again, like I said, it's advisable. And the way I did it, because yes, it's possible. And one of the advantages of paying off your mortgage early is because it helps you to reduce the interest that you're paying. And I'm going to explain that. So when I took off my mortgage, like I said, it was for 8 years and the interest rate was fixed for 5 years at 2.45. So I had to pay £291 monthly. Now, what I did to help me pay off the mortgage quickly was I called my bank and say, I want to change my mortgage to standing order. Yes, you can change it to standing order. The bank would never tell you because they always make it look like it has to be direct debit. No, you can change the amount and you can change how you actually pay it. You just have to make sure that however you choose to pay it, you are not missing the date that they are going to take that mortgage from your account. This is how it works. So my 291, I called the bank that I wanted to change how I make my payment. So they gave me the account details for the mortgage account. So I set a standing order from my current account into the mortgage account. And instead of paying that 291 off, I was paying weekly because Halifax, that's where I bank with, they don't have the option of paying weekly, like fortnightly. You can either pay weekly or you can pay 4 weeks or monthly. I think that was what I didn't say the fortnightly anyway. So I thought, right, let me just do weekly. And I was doing makeup, I work in the lab, I earn money. So I just thought, okay, yes, it's doable for me. So I changed my mortgage to standing order and I was paying £100 weekly. So if you calculate £100 weekly, that meant that I was paying £400 or £500 depending on how many weeks we have in that month. The important bit was that even though I'm paying that £100, I need to make sure that by the first of the month that the mortgage payment is going to be reflected, into the mortgage to make it look like I'm paying that 291. I need to make sure that my £100 has accumulated enough that the 291 will be taken and then the rest will just be the extra. I hope that makes sense. Because if you're doing, let's say I decide to do weekly, fortnightly, and I'm doing £200 every 2 weeks, but that £200 I'm paying by the time it's the first of the month, it would only be the initial £200 that will be in the account. Then it means I don't have my full mortgage payment of 291 in my account, and that means that you've missed a payment. That is very bad for your record, and you get interest rate charge as well. So you need to make sure if you're going to do this option, you're considering it properly, you plan it out really well. So I was doing £100 per week and I was paying £400 if the month was 4 weeks, or if it was 5 weeks, it was £500 that I was paying. And as I did that gradually, my interest rate kept going down. It was reducing. It didn't mean that, my 2.9 changed. No. Obviously, that 2.9 has been calculated and it's been added to that 291. So obviously it reflects on, when you're making that payment. So, and what that would mean is it helps you to reduce the years or the term of your mortgage. So now mine was 8 years. And from the way I broke it down, by that 5 years, I would have paid off my mortgage in full. So what I did that was how I did it. The first year of when I got the mortgage, I thought, because another way you can reduce is you can pay 10% extra every year on top of your mortgage without getting an early repayment charge. If you pay more than that 10%, then you get charged again. So you need to be considerate. So even though I was paying that £100 weekly, I needed to make sure that I wasn't going to exceed the maximum 10% of what I owe at the end of each year. That was another thing that I needed to consider. So that's another thing you need to consider. So the first year, I actually didn't think of that £100 per week because I didn't know that I could do that. So I thought, yes, I'm going to be saving somewhere and then I'm going to be paying extra, that 10% yearly. Unfortunately, the first year went and I didn't pay any 10% because life happened. you've got bills to pay, you've got other things, you've got other commitments, a lot of things will just come impromptu and will take from that savings that you have. So it was easier to just set it up weekly, and that is what I would advise. It's easier that way. You just need to make sure you're doing your calculation properly so that you're not missing any payments. And it was when I changed it to £100 weekly that it helped me a lot. Now, fast forward to 5 years later, when the plan was I'm gonna be mortgage free and I want to buy another one. But to buy another one, again, as at that time, I'm thinking, actually, I can keep my council property. I've finished paying off the mortgage. I can keep it and then buy another property, to live in. So now my council property will become a buy to let, and then my second property will be my residential property. Does that make sense? The fact that you're keeping one, I'm keeping that. If I was keeping the council house as a buy to let, then yes, the one I'm buying now is going to be my main residential property, and my stamp duty will be just as a residential property. It won't be as a second-time buyer. But now I need a deposit for the second property because I am now a second-time buyer. As at that time, in my head, I have to put down 25%. So I'm thinking, how do I raise 25% of £300? Because I wanted to buy a 4-bedroom house. So I'm thinking, how am I going to raise 25%? But now I should have been thinking of this from when I decided to be paying off my mortgage. And that's why I said, you need to consider, are you going to be living there permanently, or you're just going to be living there temporarily because you're going to be buying another one? So now, because I knew I was buying another one, I just was following the advice of pay off your mortgage. Pay off your mortgage. It's easy to pay off your mortgage. Be mortgage free. I was following that. Now, all the money that I was supposed to have as savings, I've been using it to pay off my mortgage. The second home I want to buy, I don't have any money as a deposit because I still need a deposit. So I have two options. Is either I sell the council house and use the money towards the new one I want to buy, or I can remortgage my council house. So remortgaging is basically you're using your house as a collateral to take money out because your house has accumulated. So it's generated more money because when you bought it at £50,000. 5 years later, it's worth £100,000. It means you have £50. I keep saying £50. It means you have £50,000 equity on that property, and you can take it out as part of your remortgage. That's what it's called. Some people would take that money to refurbish the house. Some will use it to do business. Some will use it because they want to do an extension to the property. So you can actually take money out of your property as equity, like that. So now the plan or the option for me was either sell the property and use the money to buy another one, or remortgage it and then, take money out and use it to buy another one. So as at that time, because I knew I didn't have any deposit, I didn't have any money as deposit for the second property, the first option, because I am now thinking of investment as well, the first option that came to my head, or that was useful as at that time, was to take equity from my property. Again, another reason why I thought in that direction is because as at the time when I approached the mortgage advisor for a mortgage in principle, it was looking like the amount we can borrow you can only buy a maybe 3-bedroom house. And I'm thinking, I want everybody to have their own space. So I really want a 4-bedroom. So I can't afford it. I don't have any extra savings because I've been using it to pay off my mortgage. As at this time, my mortgage was left with £200 to pay. Yes, that's how diligent I was with it. And that's how good I was with, I was strict with it. In fact, during the 2 years of COVID, I was broke because I was shielding at home. There was nothing like extra hours or whatever, but I still stuck to that payment. I wanted to reduce it, but I'm just like, even if I reduce it, the money will probably go to something else, and I'm already used to, paying it, and the end goal was to be mortgage free. I wasn't thinking of the other side of it. So now when I wanted to remortgage, so I decided, right, I'm going to remortgage my house, take money out. Now it's time to remortgage, to take money out. I've approached the bank. Now the mortgage advisor is working on it. Yes, we can take out up to, so now to remortgage, you can only take out up to 70% of equity on your property. You cannot take 100%. So again, that was another thing I was thinking, I would just take everything, because obviously that house, I finished paying off the mortgage. Yes, you are finished paying off the mortgage, but if you want to borrow money, you're still going to be paying it back. So really, what was the point of paying off the mortgage? Well, this was where mine affected me. I'm going to explain. So in the first instance, because my property is a council property, one of the problems I had at the time was that because the clause of that 10 years is on that property, it was one big issue initially to get the mortgage, because it was reflecting as though you cannot remortgage the house because it's still with the council. So now we need a letter from the council to say, yes, you can sell it because it's outside the first 5 years. Yes, it's still within the first 10 years, but because you're not selling it, you're only remortgaging, you are allowed to do it. All of these things was really stressful for me when I was doing it, but I'm saying it now because I've gone past that stage. I'm now in another phase that the stress is still there, but we're taking it step by step. So now, yes, because I've almost finished paying off the mortgage, I just received a call from the solicitor, and she was like, I noticed that you've only got 200 and something pounds on your mortgage. I'm like, yes. And she was like, so why are you remortgaging it? I said, because I need the money, to buy a bigger property for myself and my family. Wow, you've been really good. Well done. You've almost been, but I'm going to advise you need to stop any payment to that mortgage account, because if you finish paying off that mortgage before the full remortgage application goes through, you will not be able to do it. And I'm thinking, why? I finished paying it. It's mine. I can borrow money. But no, it doesn't work like that. A remortgage is basically, yes, you are using your property like a collateral to take money, but remortgaging is basically you're taking money because you still have money left. So now, if you've paid off the mortgage, you have nothing left. What are you remortgaging? So when she said, I was like, oh, okay. So remortgaging is basically you're still owing money, but you want to borrow more. Then that is possible, because you're now transferring the debt that you still have on that mortgage to, it might be the same lender or a different lender, but yes, you are transferring it to a different lender so that they can borrow you more, and then you're paying them. But if you finished paying it, there's nothing to remortgage. You're not owing anybody, so you can't remortgage it. And I was like, oh my God, okay. But if I don't pay anything, I'm still, thinking about the £291 that I have to pay monthly. And then I reduced the £100, I reduced it to £50. And then 2 weeks later, she called me, your mortgage is reducing, you've only got £100 left. I said, yes, because I couldn't cancel it. I only reduced it to 50. But she was like, no, by the time we finish the remortgage application, we're going to pay whatever that you're owing. And I'm like, yeah, but I'm going to be fined, I'm going to have interest, and then it's going to look like I missed the payment. And the lady was like, no, that's not how it works. We will pay whatever you owe from what you're borrowing now. So please, you need to stop that payment, because if you finish paying it off, you are not going to be able to get the remortgage. It's not going to go through. Okay. Strong-headed me, I reduced it again to £25 because I'm still thinking I must not miss that £291. And then I told my sister, she was like, if they're saying to you, you need to stop it, then yes, stop it. I'm like, yeah, but what if they charge me? They like, they told you they're not going to charge you, so stop. So as at the time I actually stopped paying, I was left with £75 from my mortgage to pay. And I'm thinking, chai. And don't forget, I started with 2.45. But now, 5 years later, the economy, inflation, as somersaulted and everything has changed, interest rate is now going to be double. And that's the reason why I was paying it off, because I'm thinking, even if if I don't pay it off, it means I'm going to be paying times 2 of what I have left. So as at the time I was thinking of stopping it, I had like £1,000 left. So I'm thinking, if I now stop the payment, I'm going to be paying £3,000 back, because it's now going to be double or triple my 2.45 now. That's why I didn't stop it and I just continued to pay. But as at the time, anyway, I had £75 left, and my remortgage went through. Now I'm back to owing £80,000 more. And the interest rate, I think it's 5.23 or 5.5%. I was paying 291 previously, don't forget. Now I'm paying 581. I said to my sister, I am not paying anything extra, because yes, I've said this now and it sounds like it was easy, but as at the time, guys, my head was always hot, because we were still waiting on the council to confirm that yes, you can actually remortgage that property, even though they already sent me a letter. Because initially I sent a message to the council to say that I wanted to rent out the property. Do I need a permission from them? And they were like, no, as long as you're not selling, you're fine to do whatever you want to do with the property. So I sent that email to the solicitor when she called me to ask this information, but my solicitor insisted she needed a message from council to say that I could actually remortgage the property, because that clause was there and it was affecting the remortgage application, and the bank would not give the money until they say a confirmation to say that you can actually remortgage the property. So that's another thing when you're thinking about buying the council house, because that process, and you guys know, everything that has to do with council, it's not quick at all. Like, you have to be extraordinarily patient when you're dealing with the council. So I think the whole process was supposed to go through by March. As at the 1st of February, that was when the solicitor sent an email to council, and then she called me on the 27th to tell me, oh, I've not heard back from the council. And I'm like, are you joking? You're just telling me now, when my my 5 years fixed rate was going to be finishing by first week in March, 2nd of March to be precise, and you're calling me on the 27th of February to tell me that you've not received any response from the council from the 1st of February. I couldn't sleep. A lot of things was going through my head, because I'm just like, what is this woman doing? Like, why is she calling me at this time? Myself and the mortgage advisor, we started to call the council. Fortunately, my mortgage advisor went through and got through to council, and then they sent an email back to say, confirm that yes, I could remortgage the property, and I didn't need any permission from them because I wasn't selling the property. So the clause is, if I was selling off the property within 10 years, then yes, they have the first right of refusal before I can sell it on. But I wasn't selling. I was only borrowing more money on my property. So again, this applies if, yes, you're still owing a lot of money and your fixed rate is due, you have to remortgage no matter what. You're owing, yes, you have to remortgage. If you're not owing, then obviously you don't need to remortgage, because that's it. You're not owing them. But if you're thinking of the next thing that you want to do with that money or with that property, you need to consider all of the pros and cons. So anyway, my remortgage went through and I used that money to invest. If you can guess, put in the comment section. But until then, it will be a secret, and I'll be sharing it in my next or future videos with you guys, and you would know what it is. But yes, that was how my remortgage went. Yes, you can remortgage your council house even after you've bought it, once your fixed rate is done, but you need to consider a lot of things. And yes, you can pay off your mortgage early, but you need to consider, are you going to be staying there for long, or are you going to be there for short? If you're going to be staying there for, short time, just temporarily until you buy a bigger property, then it's not worth paying off your mortgage early. But if you are going to be, staying there till retirement, then yes, pay it early when you can afford it, just because anything can happen. It can be something to do with your health, it could be life itself, it could be work itself. Your hours can reduce, you can be made redundant. But yes, it's because you know that you're going to be staying in this property for long. Then yes, if you can afford it, pay extra, so that by age 40 you're mortgage free and you don't have to stress. But you're going to buy another one unless you have, another money somewhere. Then yes, please be wise. Be wise. Don't be like me that couldn't afford. Even though in fact, when you see me looking at houses, I'm looking at 5-bedroom, 10-bedroom, all those million properties without having any savings at all, because I'm thinking, oh, I'm gonna pay off my mortgage and then I will use. But things happen, As at that time, I wasn't thinking of any investment, I just wanted to buy my council house. But there was more to life than just buying the council house. So yes, I'm going to stop that video at this point, and I will be seeing you in my next video. Again, thank you for staying this far to the end of the video. If you have any questions, please put it in the comment section. Don't forget, I am not a mortgage advisor, neither am I a financial advisor, but I am an insurance advisor. And if you need any advice in terms of insurance, then please put it in the comment section. I'll be sure to help you or guide you. And please be generous. Share this with your friends. It might not be useful for you, but it will be useful for them. Or it might be anybody on your platform, your WhatsApp, Facebook. Please feel free to share this information with them. Knowledge is wealth, they say. So let's learn from each other. Thank you so much. Until next time, see you soon. Bye.